Now let's get back into the business of climate finance. Absa Bank Kenya plans to double its portfolio of credit advance and climate financing to about $795 million by 2025. Now the Tier 1 lender says that its green lending book is valued at around $397 million at the moment, and that includes $10 million for climate smart agriculture, about $166 million for climate finance, and $101 million dispersed to the bank's digital app Timiza that's designed to support financially excluded groups. Now the bank says it's diversifying its portfolio in a bid to support renewable and clean energy industries, a lot more innovation and investments in much needed infrastructure as well. Let's dig into the details of this particular strategy. Moses Mudo is the acting CFO, Chief Financial Officer, and the Chief Strategy Officer as well at Absa Kenya. He joins me in studio tonight. Thank you very much.
Thanks so much for hosting us.
And good to see you finally in person in studio after this whole pandemic business.
Thanks.
So let's start with the basics here, because I find that climate financing means different things to different people.
Right.
From your perspective at Absa, what qualifies as climate financing?
So Rama, thanks. I think for us as a corporate and particularly a financial institution, we have this very important role through financing to transition the world to a sustainable future. And there are a couple of components that fall in the climate financing bucket. I think first is green financing, making sure we are extending finance to companies and institutions and individuals that are building green, whether that's energy saving building materials, solar and energy retrofitting, consumption of water, etc., etc. But then there is sustainability-linked financing, which is we have companies out there that have tied their financing conditions to how quickly they meet their sustainable targets. So what tends to happen is your interest steps up or steps down based on whether you're meeting or not meeting your commitments. And that again contributes towards sustainable climate financing.
And is that what's happening here in our market?
I think, yes. So I think we've seen two examples of that nature. In fact, two of our clients, we've extended up to 7 billion shillings, $50 million green financing. We've been part of arranging 15 billion shillings, close to $120 million of sustainability-linked loan to one of our clients. So there are these offshoots of real examples that are coming in our markets here.
All right. So we often hear, institutions talking about green standards. The standards around, building. I believe they're called EDGE standards, for example, something developed by the Bretton Woods guys, right? Yeah. And the problem I have when I hear about building standards and building towards green ideas is, okay, that's all well and good, right? And we've seen it in our markets, people will essentially take personal loans, they'll invest in water harvesting for their properties, they'll invest in solar for their properties, but they're not necessarily getting rewarded with lower rates.
Right.
So to that extent, as a consumer, I'll hear all this lovely talk about green financing, but if it's not translating into a lower rate for me, why should I take it up?
Well, first I think is access to finance. So what we've done in Absa, we've said part of our portfolio will be targeted towards sustainable finance. So therefore, as opposed to just walking into the bank and being treated like just any other client or customer in terms of your borrowing and the practice in which we lend, there's pool of funds isolated and ring-fenced for these areas. And what tends to happen is those projects are fast-tracked and closely managed. And given we've done commitments externally around those type of things, the experience is much more different than any other borrowing process. But I think what's also important is the partners we come in play with. So I'll give you an example. We've partnered with a company that is helping us invest in smart agriculture, because we realize that post-harvest losses towards the end of the value chain of agriculture could be better managed through solar cooling plants. And so you have a company like that who is our partner, who is actually doing the groundwork across the communities and the regions.
So that's risk mitigation for you.
Precisely, but also access to markets, literally following their footsteps. But they're in the core business of renewable energy. So therefore, that also makes it easier for those communities to access finance when there's a bank behind it like ourselves, working with them in those communities. So I think there are benefits around ease of access and speed of access, but there is a benefit of price.
But what about price? Because that's equally important, right? Because looking at, for example, if you look at housing, right, the typical mortgage rate, I know in your case, if I walk into your door as a greenfield borrower, it's going to be what? You want to essentially take a mortgage, it's going to be 8 million shillings, so roughly $60,000, 25 years, 9.5%, right? But to the extent that something qualifies as green, right, if there's water harvesting as a component of that project, if there's solar lighting and storage as a component of that project, will I be able to get a lower rate?
I don't think we are yet there in terms of preferential pricing, but I think what you save in the pocket at the end of the day matters and reduces your overall expenditure. So if you think about it from that point of view, in terms of borrowing the same amount to invest in non-clean and the same amount to invest in clean, then what you save, forget about even the sustainability commitment and doing the greater good. What you save from retrofitting your house, as an example, does save you part of the pocket. But I think we are seeing these products advancing in our markets slowly but surely. I think for us, we've been in this for the last 2.5 years. And if I give you an example, just what we've done for us as a financial institution, we've reduced our carbon footprint by 26%. That's about almost 500,000 tons of CO2, equivalent to about 5 million kilometers of a fossil fueled car. So when you think about what we are doing as an institution and what we are doing for our clients, we are way on our way from where we started about 3 years ago.
At a time when the industry as a whole is raising rates. In fact, when just before you actually came in, the Fed decided to keep rates where they are. Highest levels have been in 22 years. Here we have rates, CBRs closer to 10%. It's at levels that we haven't really seen in a really long time. To the extent that we're going to be in a situation where you have higher rates for longer, doesn't that make it much harder to deliver this climate finance that the market needs? And
I think that's the biggest challenge. I think that the finance is there. I think when you look at funds, with whether banks, mutual funds, insurance funds, asset managers, and you look at uses of those funds, there's a big surplus. If you look at Kenyan industry as an example, we're talking about 1 trillion shillings, which is about $800 million, 1 trillion shillings that is sitting within banks and financial institutions that no one is accessing yet. So I think there's the price component, and I think the global macro environment, obviously, leading up.
Why would you lend to me at 12 or 13%? Yet you can lend to the government in the next. There's an IFB auction at the moment, and that's going to be at 16%.
Right, and I think the global context is important. If you look at leading up to COVID, rates were low for long. It was almost like free money. And I think they were kept artificially low for a very long period of time. So as the Fed or the Bank of England or what you're seeing in Asia, as those central banks increase their rates, for us there's a direct impact in terms of what happens to our markets as capital flies out of Kenya to those markets. And therefore to manage that, then rates have to go up this side of the globe. I think a coordinated effort on how to either halt or slow the rise of interest rates across the globe is what might begin to make ease of access and price to finance. But I think finance itself is there across multiple banking industries. It's just the price around it.
Yeah, it's always a question of how much are you willing to pay, isn't it?
Precisely.
Your loan book last year was $2 billion, right?
Correct.
About 301 or
Correct.
so billion Kenyan shillings. Correct. When you examine your loan book and where the sectors in which you have exposure, what's the most pressing climate-related risk that you see?
I think if you look at that loan book, about 60 billion cash, which is about $400 million, is what we would call sustainable finance. We did a portfolio analysis with one of our partners, IFC, to try and understand what is already within our portfolio that is sustainable finance or potentially to become a sustainable finance component of our portfolio. And that's about 20%. We actually had thought we were sitting about 10-15%. We had given ourselves a target by 2025 for 10%. So we're way ahead of that target. So I think, and when we look at the sectors where this is going, I think renewable energy is a big component of it. Whether it's commercial, residential, renewable energy, massive component of it. When you look at green buildings, as one of our clients, as I just told you, borrowed from us 7 billion cash to invest in green building in one of their projects. So I think this section of renewable finance, renewable energy and green buildings is a big component. I think the other one is agriculture. And I think here we're seeing small scale farmers and medium scale farmers very much driving the charge here. But then I think finally is what we would class as inclusive finance, women entrepreneurs. And we've committed overall for entrepreneurs to extend close to 100 billion shillings for the next 2 years through our digital platform. Again, Timiza, first half of this year, about 9 billion shillings. That has increased as we go into the second half of the year. And so extending access to finance to make finance inclusive is also part of what we classify as a sustainable finance. In fact, Rama, I think any financial institution that is going to be serious about sustainability and doesn't manage the sustainable finance component will probably fall behind in this agenda, and we are very
Right.
focused in that. Yeah.
All right. One last question for you. One of the targets that was listed in the 2022 sustainability report was to
Yeah.
plant 10 million trees.
Correct.
Right? By 2025. And I
Correct.
believe by last year you'd planted about 330,000 of those units. So if my math is right, you need to plant at least 3.3 million trees a year.
Yep.
This year, next year,
Yep.
and in 2025
Correct.
to hit
Yeah.
that target.
Correct.
Is that feasible?
So, by the way, we've crossed the 1 million mark as we speak. First of all, there was a big drought challenge last year. And then coming into this year, you've seen windfall in rains, and that has allowed us to partner with more communities and go into more areas to plant and grow trees. So we've crossed the 1 million mark. I think this is a complex one. And these are some of the things we're learning as we go. Partnerships. I mean, the government is planning to plant and grow 15 billion. So if we partner with government and bring our own resources, we think it's feasible. And if you compare December last year and September of this year, that's 700,000. So the momentum is there.
And where exactly are these trees being
Look, I
planted?
think if you go to the coast, so we plant mangroves at the coast, which are just next to the ocean, water catchment areas, and mangroves are good trees at that site. If you go to Ololua Forest in Gong Forest, we are rehabilitating that forest. If you go to Kereita in Kijabe, we are rehabilitating and planting forest trees in that area. And this is an effort where I think as private sector, we compete for profit. I think this is when we have to collaborate. So we've done a lot of work with our partners in the private sector.
Right.
And we have a joint effort, even with our competitors, to make sure we drive this charge. We are very optimistic, Rama, because I think when you think about carbon sinks in the world, we've got to create our own small way, begin to contribute to those carbon sinks. I think we are well on our way with that.